Dennis De Silva's top picks. Number 1 on this day is Headwater Exploration, ticker symbol HWX on the TSX. Dennis?
I probably alluded to this earlier in terms of it's a small cap Clearwater oil player. So again, hottest play in Canada. We've owned this across a number of portfolios. Great exposure to, again, differentials shrinking as TMX comes on full bore in the second half of this year. This is that rare combination of growth, dividend, which they initiated in 2023. It's, I think, around a 6% yield. It will grow somewhere between 10 to 15% this year. Its 5-year plan, which they initiated last year, it will grow by 50% over where it was in 2023. So quite significant growth, a nice sustainable yield, still significant free cash flow over and above that base yield that they could use to finance expansion of their properties so that they can continue to grow beyond 2028. There's some pretty interesting exploration in this name as they continue to accumulate lands, and they need to explore some of these more fringe areas. But so far, the results have been fantastic, and we're very happy shareholders, and we look forward to, again, the dividend growing, continued expansion of their land base, the growth being realized, which is unique in the oil patch, this kind of growth, and probably will be acquired well before 2028.
Okay, interesting. Tourmaline Oil, ticker symbol TOU on the TSX, is top pick number 2. Dennis?
This is the largest natural gas producer, despite being called Tourmaline Oil, largest natural gas producer in Canada. You know, it is cream of the crop. I've talked about this ad nauseum many times before. CEO was just voted CEO of the year by Financial Post. Mike Rose is the CEO, doesn't take a salary. Again, one of those unique situations, owns so much stock, has been a big shareholder, probably the biggest since the company was started, and we have followed him through his previous progressions that always end with a takeout by large cap or senior producers. In this case, we see Tourmaline as, you know, this is, I think, a very unique opportunity from a timing perspective. I never like to get into timing a stock, but when you look at this one compared to some of its peers, like an ARC, which we own also, it has been an underperformer for the last few months. I'll take some of that as weakness in gas prices. In particular, we hit, I think, a multi-decade low in February. So I think this is opportunistic to buy now for that low-cost base, significant dividend in terms of a nice base, but significant special dividends that we anticipate will come every quarter. At least that track record has been established. And a nice high single-digit growth rate. And when you combine it with specials, you're looking at mid-teens, probably 15 to 17% total return without gas doing much more than what it has now, which is bounced back from its bottoms in February.
Okay, we've got about 60 seconds left for Capstone Copper, ticker symbol CS on the TSX.
This is a top copper growth story. We do own it currently in a number of portfolios. It's in South America as well as in Mexico. This is going to go through a re-rate as its newest project comes on to production. And we see significant upside, you know, probably 20 to 30% without copper going materially higher. I know we're not too far off record highs for copper, but this is one of the better ways, I think, to get exposure. I mentioned, of course, Teck is kind of the champion in Canada. This would be, if you want to go into kind of that mid-tier, this is one of the better ways to get exposure to copper because of that growth.